What's up YouTube? Welcome back to another video, and today we're going to be going over EQ Bank's Q1 2025 earnings. So first things first, we're going to look at their financial overview on their Q1 investor presentation. So their Q1 adjusted return of equity was 15.2%, which was a little bit down year over year by 0.4%, but it's in line with their 2025 guidance of 15+%. So sitting right around where they want it to be, which is nice to see. Their EPS reached 2.98, representing an increase of 19% quarter over quarter and 8% year over year. So that's also very good to see. Good growth quarter over quarter and just short of double-digit percentage growth year over year. They also increased loans under management by 8% year over year. Their multi-residential loans under management by 30% year over year, and their total revenue 8% year over year. So another thing I like to look at when I'm going through a bank's earnings report is their plans for impaired loans and provisions for credit losses. In this slide, we can see that quarter over quarter, they increased their impaired loans by 10 basis points, which is better compared to last quarter where it increased 26 basis points. In the commercial side of things, they state that they remain confident to resolve remaining loans with reserves that they have set aside previously, as well as resolutions to begin picking up the pace later this year. On the personal loan side of things, they have 74% of their uninsured single-family mortgages set to renew at lower rates this year, which will help the business a lot overall. They also say here that they expect any losses, if any, to be very small in the context of their overall business. Now, for their provisions for credit loss, in this slide they say that their outlook remains constructive despite the uncertainty of the markets as well as tariff threats that could be hitting Canada in the near future. We can see that they are still preparing themselves for potential credit losses, with $13.8 million being marked as an expense for this quarter. As stated in the previous slide about impaired loans, they emphasize that a majority of customers that are priced at higher rates will be renewing at lower rates. So they seem very optimistic in that aspect. I'm interested to see how the next few quarters will look for EQ in terms of their PCLs and impaired loans. I'd like to see them get their impaired loans more under control and see that number start moving in a downward trend over the next coming quarters. But we will see how that plays out. For their guidance, they plan on maintaining a 15 to 17% return on equity, a diluted earnings per share growth of 12 to 15%, and loans under management to grow 8 to 12%. This quarter, they were pretty in line with what they wanted their guidance to be. Nothing substantial by any means, but it's good that they were pretty much in line with their past guidance. Another thing I quickly wanted to show was this slide. They increased their customers 26% year over year, ending Q1 with 536,000. That's great growth, great double-digit growth. We love to see that. They also plan on refining their small business accounts before rollout, which would also definitely help with their business growth rate of new customers. Overall, I like what I saw from EQ this earnings report. Like I said, nothing substantial by any means, but they did meet expectations and came up with a beat this quarter. Will I be buying more shares? Probably not as of now. I'll most likely hold what I do have, but there's been a lot of uncertainty surrounding the Canadian markets as of late, so I don't quite want to add more shares right now. I did previously buy a few when they dipped below $100 a couple weeks ago, but unless they do that again in the near future here, I probably won't add more. They do already make up around 4.5% of my TFSA, so it's pretty in line with what I want it to be, considering it's a bank. I do like that they're increasing their dividend pretty much every quarter, it seems. They definitely have the payout ratio, and yeah, like it's only at 14%, so they definitely have the room to grow that dividend in the future. So that's pretty much all for today. Just wanted to make a quick video on one of my stocks. It's been good for me so far. I got a 13% return, around $100 all-time return so far, so I'm pretty happy with it and I'm pretty optimistic for what the future holds for EQ. I don't quite think they'll be at a level of RBC, TD, or Bank of Nova Scotia anytime soon in terms of market share, but they are emerging as a strong competitor for the Canadian banking market. So, yeah, thank you guys for watching. Feel free to like and subscribe if you so please, and I'll see you in the next video.